Welcome back to Upside Down Data. We need to talk about ADA. So as I'm sure you're all aware, ADA is the native token for the Cardano blockchain, and what a rally it had coming out of election day. It was up over 300% at the top of this move. Now we have had a correction since then, but in the last few days, ADA has started to stage a bit of a comeback. And so the question that I want to address in this video is, can ADA rally further from here? Can we go and maybe even start to target prior all-time highs before too long? Or does ADA need some more time to cool off, consolidate before that ultimate push may come? So let's go ahead and look at some of our models and data, see what they think. But first, if you're interested in seeing live data from our models and more, you can go over to our website, polaritydigital.io. And if you sign up for our Polarity Digital Pro plan, get access to live data from our models and on-chain data for a variety of different altcoins and more. So if you're interested, check it out, link in the description. So I want to start off with some on-chain data. This is something that actually sets our website, polaritydigital.io, apart from a lot of other crypto analysis platforms. We actually have on-chain data for a bunch of different altcoins. And on-chain data is literally what it suggests. It's looking at data on the blockchain itself to get an understanding of where is the market right now, what are market participants doing, and how can we then predict future behavior based on what we're seeing. So that's what we're going to be looking at here. So I'm showing you here is a somewhat of a custom configuration that I put together, where the key element here is the realized profit versus loss on the ADA blockchain. Basically, are people selling at a profit or selling at a loss? And to what a degree or amount are they doing so? So what I did with this line that you're seeing up here, the green and red one, is I basically just transformed this into a way that I think is more useful to look at. So the first thing I did was I used this is our workbench tool I'm showing you here, where you can make your own custom formulas to really help take raw data and make it in a more useful, interpretable way. I basically first normalized this profit and loss, which is denominated in USD, and I just denominated it in terms of number of ADA, and that just makes it more comparable across ADA's history. Then what I did is in this, here we go. With this formula, I'm showing you here, formula 2, it's the 90-day moving average of that normalized profit and loss. That's basically what this is. And then this is just an if statement to add the color coding. So if you're in green, that means you're above 0. That means that in aggregate, the market is taking profits. And if you're below 0, that's the market in aggregate taking losses. So that's what all of these different things are. So if we look at it here, what we can see is that in bull markets, like the last cycle here, you'll have a lot of profit taking that happens, especially as you get up towards the top of the cycle. So ADA did put in a new high relative to when the most profit taking was happening, but really the vast majority of the bull run was already over by that point. And there's just a little bit more upside to be eked out and some more profit taking that happened, and then down into the bear market we went. And then we got down to these lows here, a lot of losses being taken right near the bottom, which tends to happen. That's capitulation. That's when people who bought the top over here finally give up and sell, and oftentimes that marks notable bottoming out points. So this is not just the case for ADA, Cardano, but also if you just look at Bitcoin, Ethereum, any of these other assets where we have these on-chain data you can play around with, you'll see the same types of behavior in any of those assets you look at. See capitulation near the bottoms and massive profit taking at the tops. So the reason why massive profit taking is often near the top is it's just unsustainable. You can't have everyone taking profits. Someone has to be stepping in to buy at that point. And if you have a lot of people trying to sell, you need a lot of people trying to buy. And generally speaking, when people have already seen something rip really high, fewer and fewer people are willing to step in to be that new demand. And at some point, the profit taking overtakes that new demand. Then you stall out. And ultimately, that's when you go to that bear market, where now you're kind of getting a lot of people moving towards the doors, not enough people coming in to buy. Price just continues to go down until finally all those people who bought at around the top or even before are just done wanting to sell. That everyone who is going to sell has sold. A lot of people capitulated at a loss. Finally, that's where you can find that equilibrium between supply and demand, reaccumulate, and then you can start moving into that next cycle. So the good news about where we are right now is that some profit taking has happened this cycle, but nowhere near as extreme as we saw over here. So again, we're looking at this as a 90-day average. This is kind of sustained profit or loss taking over a 90-day period. And we're just not really seeing extreme levels of this yet. Some profit taking, but not a whole lot. I won't be getting too concerned until I see it getting up to these higher levels, especially it being sustained at higher levels, because that might suggest that we're finally getting to a point where a lot of people are heading for the exits. There's a lot of supply being made available, and probably at some point soon, you're not going to have enough demand to absorb all of that new supply, or certainly not enough demand to keep on pushing price higher to very notable degrees. So the good news right now is when we look at where ADA is in the cycle, it seems like we had this really nice long kind of reaccumulation period, and now we might be starting that bull run. But the good news is that a lot of people seem to still be content to hold for higher prices, and that's good. That means that we don't have an abundance of supply coming on the market, and there might just be enough demand to continue to really shoot us up. And I think if we do see the bull run heat up again, we see Bitcoin break out to new all-time highs again, more money likely to flow into altcoins, it would not shock me at all to see ADA really take off again. And then at some point, as it would do that, we'd probably get back up to this massive profit-taking level, at which point I would start getting a lot more concerned, but we're not there yet. And so I don't think there's anything here saying that ADA can't put in big moves like it did last cycle, just from this perspective on its own. So obviously not financial advice, just make your own opinions, make with these data as you will. But that's what I'm looking at when I look at these particular on-chain data. So the next thing I want to talk about is another piece of on-chain data, but this is a little bit different. This is the total realized price of ADA. That's what this teal line is here. So if you're not familiar with realized price, basically what it is what is the price at which an ADA was moved, or in other words, at which an ADA was sold. And then that becomes the cost basis of whoever bought it. So if I sell an ADA where it is right now, someone else has to buy it, and they'll have bought it at this current price. So basically the total realized price, you can think of it as the average cost basis across the entire chain. Basically any ADA that exists, at what price did they last move? And that gives you an idea of the aggregate cost basis across the entire market. So you'll see with the realized price that in bear markets, you will dip below it. And that's just basically what's happening, is that people who bought way up here, they still have cost bases up here. Price is now going down, down, down. And the further price goes down, the more the people are selling who bought up here and then buying down here. So high cost basis gets replaced with low cost basis. The overall average comes down. Then in a bull market, the exact opposite happens. Price is going up. Now people who bought down at the bottom, down over here, are starting to sell, and then people are buying at these higher prices. So you're replacing low cost basis with high cost basis, the average goes up. And one of the things that I like to look at when I look at realized price, and I look at this for not just ADA, but I look at for Bitcoin, for Ethereum, it's a useful indicator, is what is the rate of change of the realized price? And what that's telling you, the rate of change is telling you how aggressively are people who bought at lower prices selling and then getting replaced at these higher levels. If you see this moving up really aggressively, it means a lot of people who bought at low prices, especially really low prices, are taking profits. They're selling out and then being replaced with people up here. And so when this gets really extreme, when this rate of change has been happening, going up for a long time, that can coincide with major topping points in the market, or at least where a lot of profit taking has happened. And what it's also telling you, beyond what we're just seeing with the realized profit and loss, is where were people likely selling. If you're moving up aggressively, it means that's probably a lot of people who bought the bottom, longer term holders, selling to new participants up towards the top. So this formula I'm showing you here is using this diff function that we have, and this is just basically the difference 90 days between. So what is the difference between this price, for example, and this price here? And it's just the rate of change is the way that you can look at it. So when this is going up really aggressively, it means that the 90-day rate of change is really high. That you've moved really far on realized price. So this is the rate of change of realized price, not of price itself. That's one important thing to mention here. So it's the rate of change of this teal line. And you can see that when you go up really high on this particular metric, it tends to be near these topping out points. Now, ADA did put a new all-time high up here relative to that, but that was nothing compared to what we did through here. The meat of the move was already over. And then we came down, you saw it kind of move up again as more profit taking happened here. There was another bump up in realized price that happened over here. But then we go into the bear market, and that's when you see this rate of change fall off a cliff. And then now we've been seeing it kind of stabilize. Now, what's interesting about what's happening here is that we're nowhere near these kind of euphoric levels that we saw back there. We see we're inching up, and we are higher than we got to back here in February, but we're still nothing close to where we were last cycle. And so that's one of those things where you might think at some point we're going to see something like this happen, but it might take a bigger explosion in price to convince people who bought this bear market to really start selling aggressively to then shoot the realized price up. And that could be what could then make the realized, or the rate of change here go up faster as well. But we haven't seen that yet. And so when you look across these on-chain data, it's very clear that the bull market seems to be going, but this is not characteristic yet of late bull market or end of the bull run. Certainly it started, but really this is kind of the first opening shots of the bull market potentially, kind of breaking out of this big accumulation range. Now we're maybe ready to start putting in more notable rallies to the upside. So finally, I want to now talk about more short-term considerations and what some of our models that we have here at the channel and on our website, partydigital.io, what they say for the short-term potential for Cardano ADA. So this is our short-term upside downside potential indicator. It's a risk model that we have. So high values mean high risk, low values mean low risk, and it cares about moves that play out over days to weeks, so shorter in its time horizon. And you can see that when it gets really high, gets really elevated, it tends to happen near when you're getting to kind of topping out points or where a correction is likely to come relatively soon. And indeed that happened once again, got really high, correction then followed not too long afterwards. Now, the good news for the short term is look where it is now. It got really elevated as we went on this massive run, but now it's sitting all the way back down, even actually lower than where we were right before that big explosive move. We're down at kind of these accumulation points where actually, if you just look through this bear market, every time we've gotten to these levels, these are great accumulation zones. Anyone would have been happy to have bought ADA at these short-term risk levels, especially given what we just have seen now. These were fantastic buying opportunities. And we just hit it again, and we're just rallying out of those levels. And that is a good sign. Now, does this go and take us up to all-time highs or anything crazy? No, this is the short-term model. It's talking about short-term moves. And just saying the potential is there, again, for more short-term upside. So it doesn't mean we're just going to go break through all-time highs or something like that. But certainly, you'd be much rather rallying out of these current risk levels than where we were at the local top back over here. So that's something that I'm keeping a close eye on, that we're in a very constructive place right now with short-term risk, much better than we were just a month or two ago. Now, another model that we can watch to see if this rally is likely to sustain or when it might be petering out is our TCI, our trend confidence indicator. So you want to look at how this model is trending relative to price. As you see the TCI start to move up aggressively, that's this orange line here, but then price either stagnant or even moving down, and that can be a sign of strength building in the market, and upside often then can follow. If you see the TCI move down aggressively, price often will follow it as well. So it can give you a useful guide or useful leading indicator of these movements. You'll see in this run here, the TCI already started moving down aggressively before we even hit the top, and it was very clearly falling off a cliff as we went into that correction, suggesting that caution was in order. But now we're seeing it really break out of that nasty downtrend it was in to the upside. And so as it breaks up, now price is coming up here as well. And so as we see this continue trending up, that would be a sign that this rally still has legs. But if we see it do something like this again, where it starts moving down aggressively, even while price is still moving up, that's a bearish divergence. That's bad. That might mean a correction is coming, similar to what we saw, for example, over here. So I'll be looking at these things in concert with each other. I'll be looking at the short-term UDPI. We're at a great place for risk, and we're seeing a reversal on the TCI. That is two signs in the positive direction, at least for short-term upside for ADA. But then if we continue to rally and we get higher in risk, and then especially if that happens, then we see a bearish downtrend on the TCI, that's concerning, means that a reversal might be more likely. So you can look at these things together to get a very nice picture of where we stand in the short term. So to wrap up then, when we look at the Onchain data, it doesn't seem like we're at the end of the cycle yet for ADA. It seems like more room is likely left, more gas in the tank. And it does seem even in the short term that things are looking pretty good. Now this, again, as I've been saying, and I will say again, does not mean we're just going to go crazy and go to new all-time highs immediately. That is very possible that we'll have some more short-term upside maybe, but that ADA will bump its head at some point and then maybe have to consolidate and correct some more. That would not be a bad thing. In fact, that might even be a good thing for ADA. You don't want to go too high, too fast, too quickly, because then you risk burning out for the cycle and having a lower ultimate top than you might have had if you did a more slow, careful, higher highs, higher lows, sustainable uptrend. So something to keep in mind, that a lot of people will be disappointed if ADA stalls out relatively early here. I won't be. I'll actually see that as potentially being a good thing. Give more time. Basically, make it so that these people who are waiting to take profits don't just see these massive numbers and say, oh, I better sell now. I mean, this has got to be getting towards the top. If it's boring but moving up, then they're less likely to just be saying, well, now I'll sell. It's really when there's all that excitement and all that hype that can really drive people to then try to take on those profits. If it's more boring, they might be less likely to look at it for a longer period of time, or at least wait for higher prices. Be used to those higher prices as they happen more slowly, and then ultimately wait for a higher price before they think it's time to finally sell. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. I'll have updates about our models and more over there. And go to our website, claritydigital.io, to see live data for our models and more.